In the meantime, cool Twitter fact. A cool Twitter fact, not a cool Twitter fact. A cool market fact. Um, the S&P and Nasdaq did close at a record close. Or the S&P and the Nasdaq did, and Sarah Eisen on CNBC's Closing Bell just gave us the facts. It was the 31st record close, 30th record close for the S&P in 2021. So I don't know if that says anything.
All right. Nick, you
Okay.
want to accept ARK Invest, the ARK Daily account to come up?
Just
FedEx earnings actually just came out. Let me see if I can get a report. Let me get a tweet out quickly, and I read off the numbers. Really quickly, Wolf, Lamonti, let's start with the Wolf. Kind of do it once. How was your guys' day in the market? Anything you watching? Anything like that?
Lamont, you want to go first? I'll go after you.
Sure, yeah. So I've been really enjoying this Bitcoin rally over the past, call it 8 hours. I think once some of the China mining rigs start to transition to other geographical regions, start to get out of that fear and doubt phase, the whole FUD phase with Elon and things like that, this should start to pick up. There's some other stuff I'll talk about with Bitcoin later, but been looking at swing trades for some biotech companies right now, pretty much sitting on my hands, waiting to exit some of those swings, raise some capital, and then get prepared for the next couple of weeks.
Solid. I had a really good day in the market today. I'm actually currently peaking for the day. Yeah, I'm at my all-time high for today. Well, not my all-time high for all time, unfortunately. I'm still a good 25% under that. But yeah, I guess what's crypto? I guess Bitcoin's back to like 35. I remember I tweeted the other day when I was at 28. Maybe I should have grabbed some more. That's a smart plays, but yeah, there was that nice crypto run. I sold Celsius calls today that were up a good amount. Let's see if Celsius ran after. Yeah, it looks like I sold them near the peak. Got like 35% gains on those. I'm also still holding Twitter 2021 $75 calls. They're doing amazing. They're currently up 178%. I've been pushing people. If you haven't bought Twitter stock yet, there's no reason this is under a $70 stock. But it's getting closer to there. I've been pushing it since like 55, and I'm still going to hold those. Those are leaps. Those are for January. And then unfortunately, I did lose a little bit of money on a DMTK call. They're not bad. They're down 17%, but they were up 70% like 2 mornings ago. I should have taken the profit, but you win some, lose some. Besides that, just an assortment of growth stocks that obviously had a good day today, but I guess the past week, I guess I'm pretty even, climbed out of a bit of a hole, but obviously still over the last year, very jagged personally. This isn't my growth account that I'm looking at right now. I'm not really looking at my other. I have a growth account and then a Roth and then a OTC account. OTCs, honestly, were just getting super choppy, so I sold most of that account and just took my profits. And I try not to check my Roth account every day because I really know that I'm not going to make trades in that very often. So I'm just letting those sit. So just looking at the growth account still, obviously significantly down from the top, but climbed out of a little hole that we were in, I guess, 2 days ago, and hoping to come back towards around the areas we were seeing like mid-May, early May. Obviously, if crypto can head back up, but I'm not, incredibly hopeful. I'm just glad Bitcoin didn't break through 27. 27 was where I was very worried if it broke through 27, it would fall down to 22, just from the levels of support. If it could climb back above 37, that would be super, super nice. So yeah, that's what's going on with me.
Dude, very, very interesting, man. And I'd actually really love to know, this isn't really kind of like the purpose of the stream, but hearing you say it, what type of you don't have to share either. Like, what type of stuff do you have in your Roth IRA, like the long-term account? Is it like a lot of ETFs, or is it some more individual stocks, like the mega cap names, or a little more safer names? What type of stuff you got in that you're looking to hold for the long term?
So I just pulled it up, just so I can look. And mind you, this is definitely a smaller account than my growth account. I need to start trying to max this out more often. But some of the stuff that's in my Roth, it's actually mostly individual names. I really am bad at taking ETFs and just index funds. It's something that I should do more often. Some of the stuff, but I do have some safer stuff for sure. I have like Walmart in here. I've got Zillow Group. I've got a couple of semiconductor things. I've got Lemonade. Um, a couple of these like smaller names that I just really do believe in long term. MNMD, EGLX. Those are Enthusiastic Gaming and Mind Medicine. Um, Honestly, I want to build it into more of like a index ETF one, but basically anything that's the idea for me with my Roth right now hasn't been that it's necessarily a super different grouping. It's more that I'm not looking at it on a daily basis, or I'm certainly not placing trades on it on a daily basis. I'm putting things in here and letting them sit, letting them hold. I only started my Roth last year, so it is not super old. So, if you don't have a Roth, I recommend doing it, especially obviously if you have income coming in. But I would like to transition towards maybe some more ETFs and index funds. Now that you mention it.
Yeah, man. A lot of the stuff in there, I said this a little earlier, maybe it was the last stream. There's a couple stuff like QQQ. I've been told about QQQJ, like SPY, all that type of stuff. And there's even a lot more. Like there's so many other stuff you could do, but just ETFs. On Twitter, we don't talk about them enough, but they really have their place in portfolios like that, or even just kind of safer stuff in general. So, just because they're not the cool investment doesn't mean they're not a good investment. And I know you know that. I'm kind of just like talking to everyone else. But Nick, you got anything? You want to talk about FedEx earnings a little?
I was just going to say FedEx is lower despite the beat. UPS is lower. It was a big beat. Also, touch on Microsoft. They closed market cap over $2 trillion for the first time today. I know yesterday it did reach it, but it did not close. So overall, it's a win-win situation.
Yeah. So I definitely did see the Microsoft closing over $2 trillion for the first time. I got that tweet out. It's now the second stock up there. Very, very, very interesting. Cool to see. It's nice to see on the stock screener that I use. FedEx, you got anything more insights on that? Anything on revenue or kind of like how they compared up year to year, quarter over quarter, or anything like that?
Q4 operation margin 8.7%. The estimate was 8.9%. 2022 EPS around 20.5 to 21.50. Estimate was 20.4 billion. So I don't want to say it's right around that range. So we're gonna see how well those compare. And also something that is interesting is I lost my train of thought here. Never mind, I lost it. But FedEx, despite the beat, it's still lower.
Yeah. Okay. So here, let's look at it quickly. I'll pull up the earnings and we'll look through it kind of quickly. Here, let's get the current quarter. I'm using Seeking Alpha for this, guys. It takes an extra minute or two for a lot of the stuff to come in, but when it does, they really do give you some great information. I do pay for it, but I think it's worth it. Up to you guys. I don't really care if you do, but I'm here to give it to you for free right now. So the GAAP EPS this quarter was $6.88. That beat by $1.94 when we look at the same quarter year over year, middle of the pandemic. So year over year comparisons won't be that amazing right now, but still I'll give them to you. GAAP EPS a year ago this quarter was negative $1.28, so it's up pretty significantly. Probably wouldn't even pay attention to that. Last quarter, they reported GAAP EPS of $3.30, so this is a pretty big tick up. I'll take a look after this and see how it fits into the more macro trend, give you guys a little bit more of that type of data. But FedEx, the revenue came in at $22.6 billion. That beat by $1 billion. When we look at last quarter, that was $21.5 billion. So it is down it's actually up slightly quarter over, apologize, $1.1 billion. And then year over year, it is up from last year was $17.4 billion in the same quarter. So it's up again. So FedEx definitely had some nice growth across the board. You could see it. Didn't see operating margin or anything like that. That could be really cool to look at. But overall, you can see the growth. And let me look back at the historic numbers a little bit. If you got anything or anyone else got to hear anything to say.
Yeah, I think one thing interesting to keep in mind with FedEx, and this goes for a lot of companies that have pairs. Look at UPS today as well. The correlation in the movements between these two is upwards of 80%. So if you start to see a divergence, especially on these earnings days or other catalyst days, that might present opportunities. But it's also good to sift through the information of the earnings report just to make sure like the divergence isn't explainable through some of the material they present. But they tend to run in tandem for a lot of at least the last 5 quarters.
Now, I think that definitely historically speaking, a lot of the way stocks move is like, we'll say 60% stock, 40% sector. So like whatever sector it's in or whatever specific subset or partner it moves with, when one of them moves, they're going to move together. And a lot of times that can be all it takes to move some of these names. So it really doesn't surprise me to see UPS moving off FedEx.
And just to go by looking over the 5-day chart of how UPS moved, it's up about 5%. FDX, it's up about 7%. So these stocks will correlate together. Same with Facebook, Twitter, Snap, Pinterest. So if one report's good, it's like a reflection. All go up, and then vice versa.
All right, I see Nike earnings out as well. Let me just quickly post this to Twitter. But fourth quarter, they reported revenues of $12.3 billion. That is up 96% compared to the prior year and up 21% from the fourth quarter of 2019. So they kind of break it out past the pandemic. It's about 10% average growth year over year since 2019. The full year reported revenues increased 19% to $44.5 billion. The Nike Direct fourth quarter sales increased 73% to $4.5 billion. Gross margin for Q4 came in at 45.8%, and then diluted EPS came in at 93 cents. And for the full year, it was $3.56. So I don't know if Nick, if you can pull up some of the comparisons and see how those numbers compare to what happens. I know sometimes it takes a couple minutes for the stuff to really get to all those places, but just let me know if you see those.
I was going to say Zero Hedge just tweeted out 4Q EPS 93 cents versus the loss of share of 51 cents year over year. And that's the only thing I see year over year. I'm digging through. What is it?
Yeah,
Sales.
wait, I'll take this second to actually let you guys know a lot of times where are these secondhand people, where I get a lot of these sources, where Zero Hedge. If you guys want to find this stuff from the source, most companies will put out their earnings onto the news wires, Business Newswire, PR Newswire, and a Global Newswire. So if you want to just log onto those around 4:15, spam a little bit, and you'll see a bunch of stuff. So that is a really great place to get this information first. Second, about 10 minutes later, you can find all these sources, or you can go to the investor relations page. So Nike Investor Relations, FedEx Investor Relations, and all the information will be there. So that's just kind of where these people are getting the stuff from, where I get it from.
I was going to say, let's see, Street Insider just put it up. Full year reported revenues increased 19% to $44 billion. Gross margin, to go off a little bit of that, increased 850 basis points to 45.8%, and then diluted earnings per share to the fourth, 0.93 cents, and then for the full year was $3.56.
All right, I'll try and take us a little bit through more of a macro look. We don't have to say through the numbers again. Got that twice in there. But let me look a little bit further back. So looking at the Nike Q4 historical revenue, which is this is just their fiscal Q4. So this did beat the analyst expectations, which were 11.1 billion. This is up about slightly under a 2x from last year, but again, that is a pandemic hurt quarter. So in 2020, in Q4, with this fiscal Q4, they reported $6.3 billion worth of revenue. So it's up about almost 2x from that. But when you look back to 2019 and kind of do an average, it was at $10.2 billion in 2019. So that's where you kind of see the more comparable comparable comparison, for a better word. I hate the way that ended there. But so I love looking at the trend. I'm going to link a tweet. If the speakers, Lamonti, Wolf, Nick, if you guys want to link something up at the top, we'll kind of each get one or two things in there and then some other informational stuff. But I'll try and get it up here in a second. But it's just the Q4 history of Nike revenue. Let me just search that up. I'll tag it to the top. But yeah, if the other speakers want to add something up, feel free.
I'll just say Benzinga's reporting Nike saw 141% growth in North America, 107% growth in EMEA, and 9% growth in China. The China number is really small, and I was going to say a lot of analysts were watching that. And if you have a CNBC Pro subscription, there were a lot of people, a lot of banks outperforming, buying. I didn't see any sells, so I guess Nike is still a buy and outperforming a hold.
Yeah, mega spike for
Monty,
Nike after hours.
let's look at it. But
Y'all seen
do
the
you guys
spike?
have any thoughts on either Nike or FedEx, both for Monty? I know you just kind of said a little.
I personally don't follow them really, so I'll leave it to Wolf if he wants.
Yeah, I just posted for those that are interested in kind of the technical analysis around this. So Nike was able to, if you look back at last week, I mean, they've been obviously churning up for like basically the whole past week. They're up now almost 10% on the week. But after they bottomed out around, what was it, 128, it looks like they broke back through the 130, through the 133s. And then obviously this earnings boost is just kicking them all the way back up. That has moved them to higher than they were in May. So they're headed all the way back towards heading for those March highs. So I don't know if it'll sustain this after hours pump. Not most companies don't when they just do this giant straight up green candle like they're doing right now. But it'd be really interesting to see if they can kind of sustain this 140-ish level, because there's plenty of that's kind of a strong resistance and support level for Nike just over the last 7 months, 6-7 months. If you look, they really sit on top of that 140 level whenever it hits those all-time highs. So if it can go through it, right now it's at 139. If it doesn't break through this 140, 141 area, I wouldn't be surprised to see it come back down a little bit from this jag. But if it does, and it can break through the 141 and then break through obviously that 144 spot where there is a ton of resistance at 144, from just a technical analysis perspective, it would look really good. And I'm trying to pull up TrendSpider right now to just look at some of the anchored VWAP and some of that stuff. But that is just my perspective from a technical analysis, because similar to Monty, I hadn't been following the fundamentals.
I was just going to add to what Wolf is saying. A lot of the banks for Nike, a lot of them are saying buy. UBS has the buy rating. Pivotal has a buy rating. So
I always thought like analyst ratings were very interesting, just because like if you look at the numbers, so what buy really means is that it's going to outperform the market. Hold means it's going to perform at the market, and then sell means it's just going to underperform the market. So in theory, only 50% of stocks can outperform the market. And if you look at how many stocks have buy ratings, I want to say it's somewhere like 70 or 80% of like all ratings. Like I don't know the exact number. So with analyst ratings, I would say that the best way to use them is to find one or two or three or whatever the number is for specific stocks, specific sectors, people that you can listen to and know that you're getting some top quality information here. Try and find a diverse form of people, bullish, bearish on each one. Like I will give one example. Like I have a couple analysts I follow on Apple. For me, like when Katie Huberty of Morgan Stanley speaks, I listen. I feel like she's one of the people who, for me, in my personal opinion, has always been right about the name. And like today, she raised her price target by $1, and I tweeted it out not because $1 is a big move, because $1 is tiny. That's nothing for a stock price move, for a price target move. But when you look at the underlying call and what she's saying underneath it, that is what is important to me. So that's what you guys got to look at. Find an analyst, 2, 3, each stock that you like, you respect, and it will kind of cut out a lot of the noise and help you really understand what's happening a little bit more.
One other thing, I just went into TrendSpider and I'm doing some charting on NKE right now. And if you look back to the anchored VWAPs for the last 6 months, just from the major up and down points, they all kind of collide right at a $135 range. So because it's not showing the after hours data, but I see Nike's all the way up to, it just broke through 140 now. Because of that, they have broken through. So I would basically say look for a downward test. If it basically dips back down, but it holds above 136, that is definitely a bullish indicator. And it's also Right now, it broke above a major volume shelf, which was at 137. So there is definitely, if it can hold, there's much less resistance for it to continue higher.
I think that one saying that's felt really true recently is kind of like the first move on these things is the wrong move. So, I mean, I have looked into Nike a little bit on the underlying. I like the company for the long term. A lot of times, one quarter is not going to do anything. It could do whatever. It could trade whatever. I don't really care. But I obviously like the underlying company. I love the products. But so, don't take this as that. But more or less, just a lot of the times on these things around earnings, the initial number you see or something that drives the stock up could be one thing. And then once we read into it more and you see what's really happening, you listen to the conference call. It can change. So when you see these earnings without the context of the company talking about it, they could still really move a lot. So if you're going to trade in this stuff, then great, do whatever you want. But if you're a long-term investor, don't make your decision before listening to the conference call. I believe the conference call is at 5 p.m. That is almost always when these things are for stocks that report earnings like Nike after the bell. Go and watch that before you guys do anything.
Absolutely. I should also reiterate that none of this is financial advice, and I don't think any of us are financial advisors. Maybe Lamonti, but I am not. I don't think stock market news is. This is simply opinion and observation, just from our understanding of the data and what we're seeing.
Exactly. And I feel like one thing that I've said 20 times, and I know everyone up here probably believes it, is once you start, you can't really predict the short term. It's especially in the stock market. It's so difficult. So anything we're saying in here, and anytime we try and predict a short term move, it's a guess. But it's kind of just about talking about the underlying concepts, underlying things that are happening in the market, the stocks under it, for the long term. And the market tends to work itself out, where what drives stuff in the long term is growth. Not just the stock price going up. It's really underlying revenue growth, EPS growth, company growth, everything like that.
Well, I was just going to say regarding that, a lot of people think for Nike, China would be a big hit. And in an analyst note today, Baird says that they still see good multi-year buying opportunity. Importantly, we think signs of recovery in Greater China can become a positive catalyst over the next several quarters. So I don't want to say for companies that have overseas China, I don't want to say it's not important, but it kind of is in almost every note, it has something with Greater China. Another one, BTIG buy rating, but sees volatility in Greater China. So it looks like China is, I don't want to say the key, but it could be the key center of Nike, especially.
Yeah, so Nike, there's a couple of stocks that have made that huge investment in China and have put their growth on China. Starbucks is another one that's popular over there and growing, trying to grow its China exposure. But Nike is definitely one that is tied to there. I'm not going to pretend to be an expert on China and stuff that's happening there. There's, looking at it, and I feel like this is something that we can all say, but there's definitely a lot of growth there. They've recovered from the pandemic quicker than we have. They took a lot more of an authoritarian stance. So we're seeing it now, and there's opinions about it, but whatever. Where we're at now is they've recovered a little bit quicker. So there is that growth there where we're at now. What we're seeing in the U.S. economy and it breaking out, they're a little bit more into that move. So there's that, but there's always the concern with these companies trying to grow in China. That I would say that can offset it with it's a completely different country that it's been an interesting time with some hostile relations. So there is that overhang, that political overhang when you kind of invest in this area. So although there's growth, there's the political overhang. There's two ways to put the story. So it's kind of it really is up to perspective right now. We'll have to look at it for the long term, but Nike is one of the companies that is really putting a lot into growing into China. I don't know if you guys know a couple other than Starbucks. I know is for sure one that comes to the top of the mind.
I was just gonna say Starbucks. I know Starbucks is greatly watched as. I think they were one of the first major businesses. I don't want to say the major business to drop masking, to return to the plastic cups. And I also think Starbucks has a lot of, I don't want to say room to run, but I also think Starbucks has that ground that again, is overseas, and a lot of people like Starbucks, and China, again, Greater China is the central focus of that.
All right, man. You got another good topic for us to talk on? I feel like we've done good on Nike for a little bit. I mean, I have some stuff that I could just roll on if you want, but do you got anything for us, Nick?
I was just going to say, for the broader market, we can talk the broader market as we got record closes, S&P, NASDAQ, NASDAQ 100, the VIX volatility index breaking below 15. Mike Santoli, senior markets commentator over CNBC, said today that that 15 for a moment this morning, new cycle low. He says confirms and supports the market action without itself predicting the next big move. I think the broader market itself wants to power higher. I think the broader market will, as people continue to buy. I don't know about Lamonti and Wolf, but do you feel that it has a bit more room to run?
I think this just goes back to the point. Yeah, it definitely does have some room to run, but it also has some room to pull back. Like, I'm not in this game to try and predict stuff for the short term. So in a very nice way, like I don't, it doesn't really matter to me. I don't care. So what I'm trying to do is lighten up a little bit on my high exposure, very high risk names, just a tiny bit. A couple names that that we're in a very changing environment right now, so there's a couple stocks I'm moving around on. But overall, trying to predict moves in the short term is a fool's game. Just let the market move as it goes. Feel free to, if you're a long-term holder, a long-term investor, and you want to trim or play around a couple of your positions, that's okay. But like, don't get spooked out of your core long-term holds because of whatever is happening in the market in the short term.
Well, I also think since summer is here, we're going to see a lot more reopening plays as more things continue to reopening. Disney, Idlewild.
Yeah, but I feel like what's very interesting with those names is like the stock market is a forward-looking instrument. It prices in stuff in the future, so like it feels like a lot of that stuff is priced in. A lot of the reopening, and like the Disney names is like, once one park opened, it feels like Disney starting to get the price in for all 3, 4, 5. So like it always could be one of the things where like once it actually happens, a classic buy the rumor, buy the hype going into it, sell the event. So that like totally could happen. It's really kind of just how you want to shape things, and trying to shape those stuff. You can shape an argument bullish, you can shape an argument bearishly, but at the end of the day, it's just guessing what's going to happen in the short term. I'm here to really try and invest, look in these companies for the long term, and know that the stock market, in the short term, it is a voting machine. In the long term, it's a weighing machine. In the short term, it's drive stock prices, can be a short squeeze, can be people getting behind a name. But in the long term, what's going to drive stocks is revenue growth, EPS growth, finding companies that are in growing areas, finding companies that are in really big developed industries but are kicking ass in that industry and continue to grow. There's just focus on the long term. Don't worry about what's happening in the short term on these stocks. It really doesn't matter.
Absolutely agree with that. One point I do want to make in this regards to SPY, just the S&P 500, is that there are a lot of buyers. There are a lot of buyers going on up here in the 400 range on SPY. If you just start from actually the lows of even last March, there's something called the point of control. The point of control basically shows you it's the average price where the most buying occurred at. And that is sitting at 388. So if you go back to even where SPY was trading at 237, majority of the buying is being done up here. And then even if you pull that back, to November, in November, right around when we started that run, then you'll see the majority of the buying is done at 417. So there's actually a lot of buyers up here in this 400 range as it's hitting this all-time highs. So it's interesting to see, that there is a lot of bullish sentiment. There are a lot of people that believe that this run is going to continue further, that are optimistic. And I think that the reasons for that is because Uh, there doesn't seem to be an impending um, event that is going to, crush or impede the economy. And I would also say, that there was a little bit of time where people were throwing a lot of their money into buying the dips in crypto. And I think that some of that has settled a bit. And more people are pulling back and just going into kind of the all reliable. So just a bit of a perspective if you look back over the last year.
Yeah, and I'll add to that conversation. I mean, ultimately, and back to stock market news's discussion is in the short term, and it's even hard to define the short term, but when we even think of less than a year, it's insanely hard to predict market movements. But just to give some color on where we're at today in regard to like the S&P 500, right now we're at like 21 times forward earnings. Average historically over the last 25 years is right around 17 times. One standard deviation above that's right around 20 times. And for reference, right around the year 99, 2000, when the internet boom was going off, or some you can call a bubble, it kind of peaked at around 24 and a half times. So ultimately, I think for there to be a next leg up, as stock market news was commentating towards, is it might be baked in already, but you need to have these surprises on whether it be earnings, EBITDA, free cash flow, whatever it may be. You need these fundamental surprises that aren't baked in already, because it is a forward-looking machine no matter what. But we are getting extended in terms of historical in terms of historical metrics, but granted, that is also attributable to this lower interest rate environment that we've seen over the last 25, 30 years, which that brings into question inflation, real GDP growth, and unemployment statistics, because those are all influence where interest rates will go, as the Fed has a dual mandate of stable prices and full employment. So those are just some things to keep in mind. Over the long term, it's definitely a lot easier to kind of, obviously, the probabilities of making money go up the longer your holding period. But in the short term, it's definitely a guessing game. In the long term, it's a voting machine or a weighing machine, and that's just some things to keep in mind.
Yeah, I was just gonna say, basically that's right, and we can't really say this is priced into this stock, this is priced into that stock. Is an example is the infrastructure package today passed automatically. The industrial stocks, so Caterpillar, for example, shot right up to session highs and like led the Dow. But I don't really know, were they really expecting that? Maybe they were expecting that. So we can't really base it off of a headline either. Just to add on to your point.
Yeah, no, I think along with that, it's really interesting to look at. Just because the stock goes up the day when something happens doesn't mean it's not baked in, doesn't mean it's the right move. Like I was saying this with some earnings earlier, the first move a lot of times is the wrong one. So like we don't know if this was priced in, and to like we don't figure out this stuff in one day. The stock market is not a game of hours, it's not a game of days, it's a game of weeks, months, years. So this stuff moves in the short term, it trades every day, but really it's a game played over time, and these stocks have time to be priced wrong in the short term. So like yeah, this was a maybe an unexpected event for Biden to say it today, but as I was listening to him talk about it a little bit more, there's still a solid amount of time before anything is going to happen. So like if the industrials were to give some of the gains back from today over the next month, and really this was the pop, that wouldn't surprise me. But also there is always the equal way that like it wasn't priced in at all and it could keep moving forward. It's really difficult to know what's priced in and what's not. You kind of just have to go stock to stock and have a good feeling for it. But there are certain things that I feel maybe are that other people don't.
That's literally what Mike Santoli said when Sarah asked him about that. And she says, well, you saw Caterpillar spike up. Was it priced in? And he basically gave that explanation too.
And I think you also have to keep in mind, a lot of people don't think about this, but I think it's something good to put down in your investment notebook, or, like Ray Dalio, he says to keep principles on, you see a certain signal, and that indicates something to you, and you jot those down, you remember them through time. But when it comes to individual stocks, you need to also consider that the composition of investors that are buying and selling those shares are dramatically different depending on what area you're looking at. So you look at small cap, low float, technicals tend to work better. You look at some larger caps, fundamental analysis tends to work better. You look at even different sectors. They have movements that work differently, and it ultimately gets down to the composition of investors that are buying and selling shares in that company at that time. If the majority of it is based upon a 200-day bounce at that time in this small cap, low float company, well, then chances are it's going to bounce off the 200-day. If a release of free cash flow surprise comes out and a lot of analysts start to update their models and you see a tick up in that, then chances are fundamental analysis works better than it. Granted, it would be impossible to prove. At the end of the day, a stock price is the weighted average opinion of the investors buying and selling the shares at that time. And there's no way of proving what model they're using, if they're using a model at all or whatever it may be. But that's just some things to keep in mind when you're looking at individual companies.
That's a good point. I was gonna say, yesterday morning, Cars.com released used cars, this, and Tesla surpassed Ford. Anybody have any thoughts? And even Hyundai Motors has a lot of spots. They claim 6th through 9th, and then Toyota. Why do you think Tesla overtook Ford?
What was the exact metric it was for?
Top spot in the annual Cars.com ranking of which vehicles, and the Tesla Model 3 leads, followed by Ford, the Ford Mustang, and then Tesla again with the Model Y. Why do you think that Tesla overtook Ford for a change after Ford has been number one for a while on that list?
So sorry, I could cut out for a little second. Day my friend FaceTime, but it's, again, I feel like when you look at just one number and it overtaking Ford, like I feel like I'd have to see the numbers and see for everything and in the past and really like what we're looking at here. In my head, we're talking about just the most liked car. And it really does make sense that a Tesla would have that. Tesla's beloved. Tesla has a really strong community behind it, and not many other cars are as liked or beloved as Teslas are. So it doesn't really surprise me if it's like that type of you know audition or whatever, or kind of list, but I'd have to see more.
Okay, can you guys hear me? Okay, yeah, never mind. My phone says reconnecting. I don't know why. But in the meantime, can we move on to talk about ARK Invest daily trades? I know that's a big fan, Stock Market News covers, and I didn't really look at the list last night, but what was her top trade, and do you think she will continue to buy more of it?
Give me 1 second on that. I'm actually just looking at the bank stress test, which is coming out. I'm trying to get out a tweet.
I was gonna say, yeah, we can discuss that. Yeah, we can
If
discuss
you want to
that.
can you give a little talk on that while I send out this tweet, and then Mike can give some thoughts?
Yeah, I was gonna say regarding that, the headlines coming in. I also got to pull it up.
All
Headlines
right, I
coming.
got it then. So pretty much the Federal Reserve came back with the bank stress test, and more or less said that banks would experience substantial losses under the severely adverse scenario, but would remain well above the minimum risk-based requirements. And the Fed is removing all COVID-19, restrictions in place. So there was a lot of restrictions placed on banks with paying dividends and buying back stocks, and those limits will be gone on June 30th. So I would expect on that day a lot of banks to come out and either announce very, very huge share repurchase plans or some nice dividend hikes, or both.
I was gonna say banks still have some room to run as they really do get hit hard after Jerome Powell. The last time he spoke, banks were really getting hit hard, and I think this is a good thing for banks, and also seeing a lot of more companies from this past week, not just this past week, but also in the weeks before this one, are starting to raise quarterly dividend as well. Kroger raised its quarterly dividend today, and I think more and more companies will continue to do that, and more companies will continue to even have a quarterly dividend, as some companies have it suspended. I was okay. And I was just gonna ask if anybody in the Twitter Spaces besides us four that are the speakers, if you guys have any questions, you can always come up here too and have a question. As I hopefully we like questions, but it was the banks, and banks again have a lot more room to run. Do we have anybody that would like to ask us a question? I mean, I would be up for that.
In the meantime, if nobody requests just yet, anybody can feel free to request. But if they aren't, did you post up the Kathy stuff? Did that just go up?
No, so you think he's talking about
Arkin
tomorrow? I'll jump
has.
back in here. I was writing the tweet. Sorry, man.
Oh,
That's literally
sorry.
on my other phone. Let me switch over quickly. I'm stay on this phone, but let me switch over accounts. I could go and look at the old thing. Kathy, there's no hope she's gonna post the trade soon. So that's like 50 hours away. It feels like, but it'll probably be at 10 o'clock. So let me just go back to her trades from the day yesterday. She didn't do
Did
much.
we?
They
Oh,
bought.
yeah.
Can you hear me?
Yeah, you're all good.
Nick, or okay, perfect. So didn't really make too many moves yesterday. She's been buying a lot of QSI. I've seen a lot of people on my mentions talking about that. She bought a little bit more of UiPath and did a bunch of selling around that. Nothing really momentous there. If I look back to Tuesday, she was a little bit more active. She bought QSI again then. That was when crypto dipped a lot, and she bought a lot into Coinbase and Grayscale Bitcoin. Looking at it, she bought a little bit of JD, and she's been continuing to buy Path as well, which is actually I think one of one or one of two names that are in all of that are 5 to 6 ETFs. Everything else is in 4 or 3. So that's something interesting there. But kind of just been playing a lot of her names. I talked about this a little bit earlier, but I believe 5 out of the 6 ETFs right now are up for the year. So that's really awesome to see. A lot of people love talking about the year-to-date returns when she was down 10, 15% year-to-date because they couldn't use other returns because she was up on all of them. So now I'm sure we'll see a lot of like weird time frames to show how she's been doing, but it's awesome to see.
I was gonna say we do have a request. Okay, I'm gonna prepare stock. Okay, for a question. But in the meantime, while we wait for that, did anybody watch the Microsoft event of them unveiling Windows 11?
I did not. How does it look?
From what I'm hearing and from what I heard, we will be able to have Microsoft 11 sometime this year during the holiday.
All right.
And they removed Cortana, the little speaker person. I personally don't use it, as many people were saying, "Oh, we loved it." I personally didn't use it, so I think that helped boost the market. But I guess they're going to have like a different layout too.
All right. So I just want to jump in quickly. I didn't watch the stream because I was having a lot of problems. It was super laggy. I kind of got just a bunch of headlines, so I have no idea how the event was. I kind of would have let Mick go, but it didn't really sound like you heard the event either. So we're just kind of doing that stuff. I will say I did use the product back in the day. I was a fan of it, and then it kind of just got phased out by Google Chrome, and so it's really cool to see them updating it. The event would not load for me for the life of me. I tried to get on it, wanted to get some really awesome live tweets out because there was a lot of stuff coming out. I'm trying to scroll back on the timeline to look at that quickly.
I was going to say
see,
most of the people too had problems. Did you try the Twitter live stream? I know the Engadget live stream too was also having issues. I know many people switched from the Microsoft their own event on Microsoft Edge to the Twitter.
Gotcha. So I was just on the Microsoft Edge one, so I probably could have put a little bit more effort into going on the Twitter one, but I didn't really. I kind of just did the secondhand headlines and chilled out a little bit. A couple stuff that was very interesting was Android apps are now coming to Windows 11. I saw a funny tweet from Marquez Brownlee, who's a pretty big tech YouTuber, pretty awesome guy, but he was kind of like how Android apps are coming natively to Windows 11 through the Amazon App Store via Intel Bridge technology. So there's a bunch of companies working together to get the Android apps onto Windows 11, but still a very cool concept and not something that we see too often. Let's see what else they said. Microsoft said that they were gonna put the App Store on and not charge, have zero fees to developers, which is crazy. Especially, I feel like it kind of feels like a lot of the stuff that's been happening recently by like Facebook and Microsoft have been digs at Apple and their ongoing lawsuit with their App Store. So it'll be very, very interesting to see how this dynamic really plays out with Microsoft entering in the game, charging zero fees to developers. I think that's something to that could be more of a low-key thing from this event, but will last going forward. Windows integration will have direct integration with their Teams product, which is also very interesting. So, we'll see how that goes. And they're also going to include a way to natively tip creators. So that's something that I, as a kind of creator, and I'm sure everyone else up here and everything like that, also think is cool. And hopefully they do it in the right way. But that's just another thing that's coming. There's a lot of updates. They were talking about beta testers are going to be going out tomorrow, or next week, I apologize. And then they were aiming to get the service out around holiday season.
I actually can't wait for Windows 11. I know I'm not going to be a beta tester, but I feel like Microsoft needs some rebranding. I know that they're going to try and it's going to be more like a social media kind of scrolling how I'm seeing it and viewing it. It's going to be available on Android too, so incorporating Android people too, and even with Apple, they're competing with Apple. Is Apple with their new software? I think it would be software like 16, iOS 16 or something. You're gonna be able to FaceTime Android users. They're trying to make it more like a Microsoft, and Microsoft even said today that they're going to be competing with Apple. I know, Parrot, I got you as a speaker. Do you have a question for the four of us, one of us?
Yeah, guys, I just since you were asking for questions, I just thought I'd get a comment on Google's kind of out of the blue announcement today that they were going to hold their third-party cookie ban for 2 more years. Kind of was out of the blue, so wonder what you guys thought about it.
Yeah, I thought that was really interesting. I think you're seeing this going to be kind of the trend going forward with data privacy. And if you look at some of the people that benefit off that, you look at the Trade Desk today after that announcement, it absolutely worked as a catalyst for it.
I'll echo and talk a little bit. It's very interesting to me as well. It's in this ad tech industry, 2 years is a lifetime. So we're giving those companies, I know Trade Desk is up huge today, a couple others that are up pretty big as in kind of in response to it. So it's just giving those names a little bit more time to collect revenues and do everything like that. I think that long term we're still moving in that privacy direction. But it's very interesting to see them push it off to it's just to late 2023, which in real world sense, 2 years is time, but it's nothing crazy. But in ad tech, 2 years is a lifetime.
I mean, 2 years is a lifetime. It's going to give them a lifetime thing. I just what the trigger was for this. I'm almost wondering if they didn't get some pushback on their end, or they had some problems on their end using their data without sharing it, I guess. So anyway, just interesting.
Yeah, I'll just quickly take the opportunity to say that I am actually a big fan of Parrot. He's one of the first people I followed on FinTwit, so you should check him out. You should check out all the speakers up here. Ark Invest, the daily account, is actually me, so don't got to do that one. But Lamonti, Wolf, Nick, some great people up here. Definitely people you guys should check out.
I was just gonna say I just followed Parrot actually in the last as Parrot was speaking. I'm starting to follow a lot more people that I find interesting, and all these speakers right now we currently have that they are interesting, and you should follow them because they post great stuff. Wolf, especially with the charts, him and Stock Market News Monday mornings, FinTwit, something you should check out because I love listening to that. That's like the start of my Monday morning.
Appreciate you, man. That's kind of like the goal with that thing, is to really get FinTwit going for the week. We're looking to take it up a notch. We had Parrot on this week, which is pretty awesome. So it's great to talk to him a couple times in a week. Definitely want to have him back. With him on that in the future. And yeah, no, I would definitely suggest you guys check that out Monday morning. Every Monday, let me just, I'm going to keep going with a quick promo because I could have done a better job. Just every Monday morning, 9:20 to 10 o'clock. Be there.
Eastern time.
Eastern time, damn it. All right, you could have been better.
Yeah, come on. Eastern time. Come on. Imagine I was in Pacific time and you said, 9 a.m. Oh, okay. Well, then I'll look wrong.
Did we mention, I don't know if I caught it, maybe I just missed it, what came about Microsoft a minute ago?
We were talking about
the
event.
I'll pose this question. If
So
I know
it's a little choppy in the background or something, but I do hear you.
All right. Did we mention that Microsoft, I know we were talking about their new Windows thing. Did we mention that they became the second company to hit a $2 trillion market cap?
I think we talked about it very, very briefly at the beginning, mentioned it, but do you have anything to say? A little talk more about it, because it's pretty cool seeing the second company on there.
Yeah, Microsoft just joined Apple after hours, I think, as the second company with a $2 trillion market cap, which is ridiculous. That is a lot of money. But just a little fun fact.
I'll just pose this question. I was going to say, and of course, how it's funny how Microsoft hits a $2 trillion market cap and then is competing with Apple with their new Microsoft Windows and then Apple's new iOS update. It's funny how, it's just funny to me and interesting to me how both of them are competing. And they both hit, and they're the only two companies that hit $2 trillion in market cap.
Yeah, no, I think as we were talking about this a little in the event, but it felt like a lot of the headlines that were coming up were it's really Microsoft trying to target Apple, and definitely the App Store one was really felt like a personal dig, especially with everything going on right now at Apple. So it is fascinating seeing these companies, compete a little bit at the top. Wolf, I saw you unmute if you had anything there quickly.
I was just going to say, maybe they're in the right industry.
I feel like that it's fair. If there's only two companies valued at this, and it's these two, and they're in the same industry, there's something right about it. I feel like you can expand that a little bit to the $1 trillion club. There's a certain type of names up there. You can even go even further at 500 billion, 100 billion. There's type of names that succeed and have those valuations. While we're on this little theme here, Facebook is slowly creeping up to that $1 trillion market cap. I put out a tweet the other day, and I want to say the price that it became $1 trillion, but either like 350, 353, 355, somewhere in that range. But at 343 right now, it's kind of getting a little bit close. It's in the $980 billion market cap. So could be the fifth U.S. listed company to join the club.
And to actually talk about Facebook, I know one of us, it was either you or I, Stock Market News, that posted something, and Wolf even got into it. Someone says that it's that Clubhouse, Facebook, and Spaces are starting to be a relay off of each other. I think Spaces have a little bit of a different tone, a different view than Clubhouse is. I don't know. I just feel like Twitter Spaces, Facebook Live, Clubhouse, I don't want to say they're in sync, unique, but each and one of them have a different unique feature or features.
I'll give my thoughts. Other people can have their own. I think they are essentially the exact same thing. And I think that, there's different features or whatever, but the general concept that's happening, these type of discussions that we're having now is the same exact thing, just with a slightly different paintbrush over it. So I believe in this. I'm here. We're doing this. And I think that these get a lot of value and I enjoy them so much. So I think that the space is here for this. And so I think that Twitter and Instagram Live and these other existing platforms have such an advantage of being able to natively put it into their apps, whereas these are not the main product. It's just, a side dish, a really great side dish that adds to the pizza, to add to that whole dish. But if you're just giving out side dishes, no one's going to come to that restaurant. And I think that example kind of goes to Clubhouse. Clubhouse had its opportunity to expand. I think they had to do it aggressively. They needed to, get on Android. They needed to, not have a ticketed private system. They really needed to get both, get everyone onto the platform. So this is the place where we have conversations, audio conversations. Instead, what happens? They took their time. They made their app as good as it could be, and what's going to win in this space? What really gets that first mover advantage isn't necessarily like the overall quality. You want it to be good enough, and you want to get it in front of as many people as possible. And I think Clubhouse really, really failed at the getting it in front of as many people part as possible. And we're seeing the drawbacks of that for Clubhouse with Twitter. Spotify came in and did a similar product. Like their lunch meat has thoroughly been taken from them, in my opinion.
Oh yeah, no, and for sure. And I mean, Twitter Spaces continue to be improved. Twitter.com especially continues to be upgraded, and pretty soon we're going to be able to have Twitter Spaces. You're going to be able to start one off of iPad, the web app itself, instead of just listening. And I think Twitter is coming up with a lot of new ideas, especially with uh, ticketed followers, ticketed spaces, or super followers, excuse me. And I think as we go on, we're going to continue to see more and more ideas. And it's going to be like a win-win, fail situation, as they're going to try. Maybe it does not work, and then maybe it will work after they continue to improve it.
Agreed. Real quick, sorry guys, I do have to run. I have another meeting now for 5 p.m., but appreciate you having me on. Again, always good talking with y'all. Yeah, I'm gonna have another space actually with stock market news that we're doing tomorrow at 12 p.m. EST. If anyone's interested, that's gonna have a couple of big players on that. So I'll just let y'all know who's on that real quick, and then I'm gonna pop off, and that's gonna be Trust Fund Terry will be on that. So if you haven't heard from him, I don't think he's done a space before. Gergavin, Business Famous, Austin Hankwitz, and Facts and Analysis.
I'm gonna jump in quickly.
So that will be.
Wait, and we're trying to get Ram Capital on as well. So that one is, it's definitely a maybe, and maybe we shouldn't hype it out. But I'm here to, if I could put a tiny bit more peer pressure on him, I will. Hey, why not? He has meetings, is busy during the time, but sometimes they don't go too long. So kind of hoping he can maybe check in for a little bit. So we'll name drop Ramp a little on this one as well.
I was just gonna
Absolutely
say,
attempting.
yeah, and I was going to say, as we close it off here, I thank everybody for joining. I think for our speakers, and we will have to do this again regarding earnings. And I mean, Twitter Spaces will continue to be improved. We'll continue to have fun on Twitter. And thanks everybody for joining.
Before you end it, just quickly, thank you guys for coming in. Wolf, check out Wolf's Twitter. Check out the Wolf app. Doing some really awesome things there. Lamonti, if you got anything to say really quickly, you wanna get in there.
Yeah, thanks for having me on. I definitely second following each of the speakers. They're great guys. You'll learn a lot of information and get coverage on everything financial related. If you're ever interested in cryptocurrencies or biotech plays or fundamentals and valuation, hit me up. DMs are always open and happy to help.
Awesome. Great to hear that, Parrot. Thank you for joining in. Kind of just giving. Do you have anything that really quickly you want to say, or just whatever?
No, just appreciate you calling me up, guys.
Yeah, appreciate
y'all
Thank
doing
you,
this.
man, for coming in. Love the question. Love you joining in. Nick, appreciate you doing this. Great hosting stuff. Let's see if I kind of want to host the next one. I want to do a little bit more of these, but we'll see. We'll talk about that.
And
yeah, appreciate you.
I'll listen to you guys tomorrow at noon, so I will make sure to tweet those spaces out. And thanks everybody for joining. Thanks for our speakers, and we will catch you all next time.
Yeah, have a good one.
Sounds good. See y'all.
See ya.